heard of an investment approach called relative strength investing, but you might have heard of momentum investing. It's a little bit more popular, but less sophisticated than relative strength investing. But relative strength is a strategy that aims to outperform major benchmarks and popular market averages by identifying leadership trends over longer periods of time. So this approach, very similar to momentum investing, takes the guesswork out of investing and relies on algorithms and price behavior to make logical decisions on where to invest our clients' money, how to balance and how to weight the different asset classes. It focuses on selecting investments based on their relative performance or price performance compared to other investments. The basic premise of relative strength investing is, it's quite simple. It's that assets that have been outperforming in terms of their price generally continue to outperform for a long time. So whatever was outperforming was the strongest assets in the last month, typically is going to be the strongest asset class in the next month. So while those that have been underperforming at the same time, they'll continue to underperform and they'll continue to lag behind. So relative strength is just one of many ways to invest in today's market. There's a lot of investment approaches out there. This is very similar to a type of martial arts like karate or kung fu or judo, but our version of relative strength is more sophisticated and more effective than other types of investing strategies. So the core idea behind the strategy is to identify leadership trends in the stock market or in the bond market, commodities market, etc., using 6 asset categories. So the asset categories are international stocks, US stocks, commodities, cash, fixed income, and foreign currencies. So we break the entire publicly traded financial markets into these 6 groups. Each of these categories may have subsector classes, and their performance might shift over time based on various variables and events across the globe. So the aim of relative strength investing is not to predict how these factors are going to affect the market, but just to follow the leaders as they perform. This is done by investing in long-term trends of leadership, so leadership trends. And these leadership trends happen because of seismic shifts in the global economy. Things like wars or which politicians are in charge, things like droughts. This strategy views the market through a longer timeline where prices move with purpose. It's like a cruise ship. It's very hard for it to turn, not in random or chaotic bubbles like maybe a small speedboat. You think about it this way. LeBron James, one of the greatest basketball players of all time, it's more likely that he's going to be a great basketball player again in the next season. And he might slightly diminish in performance, but he won't come out and bomb next year. It's the same thing when it comes to relative strength investing or in the financial markets in general. Leaders trend over the long term, and we just invest in those long-term trends and we focus on those leaders. To apply relative strength investing, investors first have to identify a group of assets that they're interested in investing in. And for example, if an investor is interested in investing in stocks, they might choose a basket of stocks from a particular industry or a basket of stocks from a particular sector. And then the investor compares the performance of each asset in the basket over a specific period of time. So the past 6 months or the past year. That's momentum investing. Relative strength is a little bit more of a sophisticated version of that. So the assets that have outperformed their peers during that time, those are considered to have high relative strength. At the same time, those that underperformed in terms of their price behavior, those are considered to have low relative strength. It's pretty basic. The investor then invests in the assets with the highest relative strength and avoids those with low relative strength. So it's not forecasting, it's not predicting the future based on national or world events. It's simply identifying the leaders and just keeping your money in those leaders until they stop being leaders. Relative strength will always seek to outperform the benchmarks over the long term, but you must know that when you seek to outperform, you're also going to go through periods of underperformance. And I'll say that again, there is no way mathematically to outperform the major averages without also experiencing periods of underperformance. We know that you want to see great performance each quarter. We know that you want us to outperform each quarter. So would we. But that's not reality. It's absolutely unrealistic. Anybody who tells you otherwise, you should run as fast as you can. The key question here is when relative strength underperforms, because it inevitably will go through those periods of underperformance. So when that happens, the question becomes, how much will it underperform where you are still comfortable with it? The solution at Avalon, we combine our relative strength investment approach with risk management. So this is where risk management comes in. The idea is to put you in a position where you are seeking to outperform benchmarks like the stock market or the commodities market, while at the same time keeping you within your risk tolerance range during times of underperformance. So we're focused on finding situations with the highest probability of success to help your portfolio grow safely, and that's why we use relative strength. When it underperforms, we want you to have an easy time with that, and that's how we match up relative strength with your risk management levels. And it's very simple. So again, I hope this makes sense to you, and check out the next video. We'll talk a little bit more about risk management.